Let's welcome our next guest to talk stocks and portfolios. Mark Sebastian is joining us from Austin, Texas. He's founder of Option Pit, and he's also CIO, Chief Investment Officer of Karman Line Capital. Mark, let's talk about the stocks that have dominated the stock market for a good couple of years now, the big tech stocks. What is your outlook on this important group of stocks in 2025? Will we see, in the face of inflation concerns and perhaps at least a slower pace of rate cuts than the market would like, will we see growth in these stocks tail off?
Well, first off, Paul, I think we're within the time frame where I can say Happy New Year.
Yes.
So Happy New Year, Paul.
Thank you.
And second off, I think we're aligned for a bit of a shuffling within this group. Apple seems to really be slowing up. We saw kind of an end-of-year ramp. The face of Apple in terms of how it's used as an asset has changed. It's not really just a straight investment anymore. In some ways, I think a lot of investment managers are looking at Apple as kind of a replacement for U.S. Treasuries. Because we've seen treasuries under pressure, a lot of interest rate confusion. What's going to happen here? The bond market is really in flux right now, and so when we're in these risk-off events, we've seen Apple show strength during those periods of time, and now kind of post New Year, got a big sell-off yesterday. I wouldn't be surprised to see some selling now that the year is over in Apple, and some money managers looking for areas around the market there, because really 2025 was a great year on the top line, but maybe not such a great year for a lot of companies on that are not in those top 10 stocks in the S&P 500. If you kind of look across the sectors, there are 13 major sectors that make up the S&P. Only 4 of them met or beat the total return of the S&P 500. Now, those are the 4 that have those grade 8 stocks. The rest of the other 9, it trailed or drastically trailed the return of the S&P, some of them even negative. And so one within the grade 8, I think you have to have Broadcom in there. It's another $1 trillion company now. And it's not a Berkshire that is really more of a mutual fund in a lot of ways. I think you're going to see some assets move around within that, and then some assets come out of those 8 stocks and starting to look for opportunities, maybe in the next tier down, out of the ultra mega cap and into the mega cap, and even just the large cap space, looking for some opportunities to potentially outperform in 2025.
Talk to us a bit more about Apple. You highlight that one in particular as having an issue.
Yeah, I mean, it's super widely held, so you're never going to get completely crushed in that thing. But let's be honest about what this company is going forward, right? It's not a company that should be demanding 20% returns a year unless you truly, truly buy into this cell phone super cycle. People are holding on to their cell phones longer. I don't know that. I think Apple made a mistake kind of not going after their own technology and outsourcing it to somebody else. I think that was a key mistake for them. And we haven't seen the demand so far on the AI phone. I think their first quarter could be, their fourth quarter returns that we're going to hear about this quarter could be disappointing. And, that could take a little bit of the shine off of Apple. And again, I think it's turning into a safe haven asset unless you truly believe that they're going to do something they're currently not doing. I just have a real problem looking at even their forward guidance and with the PE into the 30s for a stock that is not seeing massive revenue growth and maybe kind of flatline revenue growth if you really look over the past few years. So unless you think AI is truly going to change their trajectory on the phone, I think it's not dead. it's less exciting money than the other 7 stocks in that grade 8 or mag 7 that you want to talk about.
So your view is that leadership in tech and leadership in growth perhaps gets passed to what you referred to as a second tier of stocks. What kind of sectors are in that tier? What kind of names might be in that tier?
I mean, I think it's interesting that I think there's Amazon has a relatively low price earnings ratio, starting to look really interesting. They're making money. I think that's one that could see a big market cap increase. I like Google was kind of the laggard all year. I like that one to move up. I think Microsoft probably ends 2025 back as the most valuable company in the S&P 500 at the end of the year. So I think the end of year selling in Microsoft may be a bit of a gift here as it probably works its way higher as the year progresses. NVIDIA is such a wild card. It's so hard to kind of figure out what they're going to do. 2025 is going to be a key year for them because this is the year when allegedly a lot of the competitors start to be able to potentially show their teeth and put something out there that can compete, or at least have some realistic forward guidance as to when they're going to have something that can directly compete with NVIDIA's chips. Again, the old saying is the solution to high prices is high prices. NVIDIA has really enjoyed high prices and high margins. That will not last forever. And the question is, when does that come into play? NVIDIA, to me, at this point, with where it is valued, it's a trade more than an investment for me. Google, Amazon, those are more investments.
Okay, we will take a break and be back with Mark Sebastian right after this to talk about other stock picks